Portfolio or asset classification allowed by the Nigerian Pension Commission or PFAs, 100% investment in government securities, 20% in state government bonds, while 30% is reserved for corporate bonds and debt, including real estate investment, mortgage and asset-backed securities. Earlier, I caught up with Haruna Jallo-Waziri, Executive Director of Business Development at the Nigerian Stock Exchange, who shared some of the steps taken by the NSE to encourage PFA's participation at the Nigerian bond market.
What we have tried to do at the Nigerian Stock Exchange is to create a fixed income market on a retail basis that will be traded, such that it's auction based, so people put in their bid, people put in their offer, and the different prices, and it's agreed, and the price is locked and it's sold or it's traded. What it does to our market is that it brings transparency, and there's an opening time and a closing time. So at the end of the day, every day, you see the price at which the last trade was done, and that becomes the closing price of the day. With that, portfolio managers can use that pricing to actually mark-to-market their portfolios. Under IFRS, all investments that are for trading are actually required to be mark-to-market at the end of every period. And unfortunately, there are a particular set of fund managers today in Nigeria that don't actually mark-to-market their portfolios, even though they trade them, especially on the fixed income basis. And when you do that, you are in contravention of the IFRS requirements. And so we need to get the supervisors or the supervising institutions to actually be able to enforce that particular mark-to-market portfolios rather than hold it to maturity, because it's not reflective of the actual valuation of that portfolio. And so we're in engagement with most of them to say, come use the prices that we close with, and so that will increase the velocity in the market as well.
So is there a timeline? How soon do you see a breakthrough in this discussion?
Under the IFRS, what's it called, implementation plan, I think all companies have to be IFRS compliant by 2015. However, for the Nigerian Stock Exchange, we're already saying all companies reporting their accounts as at the end of the year of last year is must be IFRS compliant. So we are already compliant in terms of that requirement. But it's specific to portfolio managers who are outside the control of the NSE or the SEC. But they have to do it by 2015, and the roadmap for most of all is the end of this year. But they better start doing it now, because that reflects the particular or the actual valuation of what they're carrying rather than hold to maturity, especially for fixed income, which is detriment to the reporting standard of the portfolio.
Now, finally, obviously, so much, the market has recorded so much progress, even the corporate bond market, and of course, there's still room for improvement. What's your outlook 5 years from now, or perhaps in a medium term?
I think with Nigeria growing at sub 7% GDP, with our population growing, we're getting infrastructural efficiencies in the market, and also physical infrastructure. Sincerely speaking, I see Nigeria being the gateway for African markets to go forward, both from the capital market perspective and from the other markets as a whole. And Nigeria has the advantage of being central within the equidistance of Africa, and has a +1 GMT time zone. So they are equidistant to all markets at the same time. We just can't but ensure that we tap into that particular opportunity that we have. And democracy is getting better. Yes, we have security challenges, but those are only ad hoc or temporary, if you ask me. By the time we overcome these things within the next 18 months or 24 months, you'll see what's going to happen to Nigeria.